In the world of semiconductors, everyone talks about the brains. We obsess over the CPUs, the GPUs, and the AI accelerators that grab the headlines. But a brain without a nervous system is useless. A brain without power regulation is dead. Today, we are going to talk about the company that builds the nervous system of modern electronics. A company that has quietly transformed itself from a commodity component supplier into a powerhouse of the automotive and industrial sectors. That company is Diodes Incorporated, ticker symbol DIOD. We have analyzed their financial journey from the uncertainty of 2020 through the boom of 2022, the correction of 2024, and finally, the emerging recovery signals in their latest Q3 2025 report. If you are looking for a semiconductor stock that combines value, discipline, and a strategic pivot to high-growth sectors, this is the story you need to hear. Let's start with the big picture. What does Diodes Incorporated actually do? They make discrete, analog, and mixed-signal semiconductors. Think of these as the fundamental building blocks of electronics. Every circuit board needs diodes, transistors, and power management chips to function. For years, Diodes was known as a high-volume supplier for consumer electronics, things like PCs, smartphones, and set-top boxes. It was a good business, but it was volatile and had lower profit margins. However, starting around 2020, management accelerated a massive strategic shift. They decided to move up the value chain. Their goal? To reduce reliance on consumer gadgets and go all in on automotive and industrial markets. Let's look at the numbers to see how this played out. In 2021 and 2022, during the post-pandemic chip shortage, Diodes executed perfectly. Their revenue broke records, crossing the $2 billion mark in 2022. But more importantly, look at their gross margin. In the semiconductor world, gross margin is the best indicator of a company's pricing power and product value. Historically, Diodes operated with margins in the low 30s. By 2022, they pushed this to over 41%. This wasn't just luck. It was a structural change driven by their new product mix. But trees don't grow to the sky. The semiconductor industry is cyclical, and the downturn came in late 2023 and continued through 2024. As we analyze the 2024, 1OK and the early 2025 reports, we see the impact of the inventory correction. The 3C market, consumer, computing, and communications slowed down significantly. Customers had too many chips on their shelves and stopped ordering. Revenue in 2024 declined as the company faced headwinds, particularly in Asia. However, this is where the Diodes story differs from many others. In previous cycles, a downturn like this would have crushed their profitability. But look at 2024 and 2025. Even as revenue dipped, their gross margins remained resilient, staying significantly higher than their historical averages. Why? Because the automotive and industrial parts of their business held up much better than the consumer side. Now, let's fast forward to the most recent data, the third quarter of 2025. Ending September 30th, 2025, we have the 1OQ report right here. What is the market telling us? The data suggests we are navigating the bottom of the cycle and starting to turn the corner. In the first 9 months of 2025, Diodes generated approximately $956 million in revenue. While this is lower than the peak years, the sequential trends are stabilizing. The company has been effectively managing its channel inventory. This means the glut of chips in warehouses is clearing up. Crucially, let's look at the balance sheet in the Q3 2025 report. It is pristine. They have significantly reduced their long-term debt. This is a trademark of Diodes management. They are incredibly conservative and disciplined with cash. Even during this down cycle, they have generated positive cash flow. This financial fortress allows them to continue investing in R&D and acquiring smaller companies to fill technology gaps, even when competitors are pulling back. Speaking of technology, why should we be bullish on their future? The answer lies in 2 words: total solution. Diodes is no longer just selling a generic part. They are selling complete power management solutions for electric vehicles and Industry 4.0 factories. In their recent filings, they highlight products for Silicon Carbide, SiC, and Gallium Nitride, GaN. These are next-generation materials essential for fast charging in EVs and efficient power supplies in AI data centers. By entering these high-tech markets, Diodes is expanding its total addressable market, TAM. Another key factor is their manufacturing strategy. Diodes uses a hybrid model. They own some of their own factories, which gives them cost control, but they also use external partners. This allows them to scale up production quickly when demand spikes, without having to spend billions building new factories that sit empty during a downturn. This flexibility is a massive advantage in a volatile market. Let's summarize the investment thesis for late 2025 and beyond. First, the cyclical bottom is likely behind us. The inventory correction that plagued 2023 and 2024 is resolving. Second, the product mix has fundamentally changed. Diodes is now an automotive and industrial first company. These sectors have longer product life cycles and stickier relationships with customers compared to the fickle consumer electronics market. Third, financial discipline. With a strong balance sheet and a history of smart acquisitions, they are ready to capitalize on the next upswing. The stock market is a forward-looking machine. It doesn't care about the drop in 2024. It cares about the earnings power of 2026. If you believe that the electrification of cars and the automation of factories are secular trends that will continue for the next decade, Diodes Incorporated is the pick and shovel play to bet on. They don't need to be the flashy star of the show. They just need to be inside every machine that matters. And right now, that is exactly where they are. As we move into 2026, keep an eye on their gross margins and the recovery of the Asian markets. If those two metrics trend up, Diodes is poised for a significant re-rating.